This is an Uncovered Japan company research report on F&M, ticker 4771. F&M bundles bookkeeping outsourcing, cloud HR software, and subsidy consulting for Japanese small businesses. The central question is whether its partner-led distribution and unusually high margins are better than the market currently recognizes. The starting snapshot is unusual among small-cap business services names. F&M traded on about 12.4 times forward earnings, while fiscal 2026 operating margin was 18.5%. Return on equity was 19.7%, and the equity ratio was 74.7%. Those figures frame a high-return business with a balance sheet that does not depend on leverage. F&M is not a pure software company and not a traditional bookkeeping shop. It combines stock-type outsourcing revenue, cloud HR software, and high-margin consulting. Customers use its accounting support, Office Station HR products, and subsidy application help. The model matters because stable service earnings can fund growth investment in software, without the persistent losses common at some cloud accounting peers. The three important segments are consulting, accounting services, and business solutions. Consulting was 39% of sales and provides subscription management support and subsidy work. Accounting services accounted for 26% of sales but earned a 34% operating margin. Business solutions, including Office Station Cloud HR, represented 31% of sales and is the deliberately lower margin growth engine. The report identifies distribution as the load-bearing advantage. F&M is embedded in training channels at major life insurers, has tie-ups with 234 regional banks and credit unions, and reaches customers through 3,666 licensed professional offices. Those intermediaries make referrals trusted and lower customer acquisition cost. Replicating the partner network is harder than copying any individual software feature. Over the 5 years to fiscal 2026, revenue compounded at 17.6% to 20.8 billion yen. Operating profit compounded at 14.5% and reached a record 3.86 billion yen. There was an investment-driven dip in fiscal 2024, but both revenue and operating profit subsequently recovered. The evidence points to a business that has been expanding while retaining substantial profitability. The profit chart shows why the recovery deserves attention. Operating profit dipped with investment in fiscal 2024, then reached 3.86 billion yen in fiscal 2026, while net income rose to 2.83 billion yen. The report attributes the recovery to growth in the core businesses and an AI contribution that management said had moved into a profit contribution phase. Investors should still follow whether that improvement proves durable. F&M combines a 74.7% equity ratio with a 19.7% return on equity in fiscal 2026. That is a valuable combination. The balance sheet remains conservative while the business earns high returns. The trade-off is that a company with excess capital needs to show disciplined reinvestment and shareholder returns, rather than simply accumulating cash. Cash flow provides a useful cross-check. Operating cash flow reached a record 5.2 billion yen in fiscal 2026, while free cash flow rebuilt after heavy software investment. That investment is important to the cloud HR growth case, but it means investors should watch whether new software spending continues to convert into customer growth, margin resilience, and free cash generation. On the report's data date, F&M traded at about 12.4 times forward earnings, below its 5-year average of roughly 15.6 times. The valuation case rests on that gap, alongside high margin and return on equity. It is not a conclusion on its own. Multiples can change quickly, and the report identifies subsidy policy exposure, hiring pressure, and thin liquidity as reasons the market may still demand a discount. The report's revenue path illustrates the scale of the opportunity, not a company forecast or recommendation. It shows fiscal 2027 estimated revenue of 24.7 billion yen, and a longer-term author base case approaching 35 billion yen by fiscal 2029. The facts to follow are customer growth, partner channel depth, AI-enabled efficiency, hiring capacity, and the durability of subsidy demand. F&M combines a differentiated partner-led distribution system with profitable services, cloud HR growth, and a strong balance sheet. The appeal rests on whether the company can keep compounding without sacrificing margin, and whether its software and consulting engines remain resilient. The important watch points are channel depth, customer growth, hiring, subsidy policy, and capital allocation. This is research for education, not investment advice. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.